Hello, I'm Tony, and welcome to the Tony Shap Show. Well, hello, everybody. Welcome back this week. I'm super excited to have Dan with us. I can't wait for him to talk to us, and we're going to have a great conversation. He's going to share with us who he is, what he's all about, and what he does. With that said, Dan, welcome to the Tony Shap Show.
Thank you. Good to be here.
You're super welcome. So let's dive right into the one word opens. Let's just kick it off. If you could use one word to describe how you are feeling, if you could share that with the audience, that would be great.
How am I feeling? I'm gonna share how I'm feeling in a business context, which is excited.
Excited. I love it. Perfect. And speaking of business context, let's dive right into your business. So tell us about your firm, how you got started, your why, and what you do, where you are, and where you're going. I know that could be a two-hour answer, but just high level, that would be great.
All right. So Solis Capital Partners is my firm. We are lower middle market investors in private companies. I founded Solis Capital in 2002, and we've been investing in lower middle market companies ever since. It's my second go around. I previously co-founded a firm called Unique Investment Corporation that did the same thing. Really, if you strip it all away, at the core of what we do is we believe investing in companies is really betting on leaders and leadership teams. And so if you look at every aspect of how we invest, it emanates from that core philosophy. So when we look at an investment, we spend a lot of time getting to know the team, understanding their drivers, their opportunities for improvement and growth, reaching consensus as to what we're going to do once we make an investment. And then once we make the investment, we view our role as collaborative in supporting that team in carrying out that mission. Really, in a nutshell, that is what we do and have been doing for a long time.
That's awesome. How long ago was it? Like, I know you've been doing it for a long time, but
well, as I mentioned, Solis was founded in 2002, and I started investing and doing the same thing that Solis does in the early 90s.
Wow, awesome.
So it's been a long time.
Really cool. That's awesome. So let's talk about recent wins. If you could share with us a recent win that you just have put on the board, so to speak, in business context, and also what you learned from it, that would be awesome for us to hear.
Well, okay. So really probably the most profound lessons don't come from the wins. They come from the ones where you don't win. Pain is a great teacher, and certainly, anybody who's invested for any amount of time has stories about both, and both are important. You can't see in my office, but when we make investments, we don't do a normal loose site. I wish I could show you, but we do original pieces of art, and I hang the ones of the deals that are, in fact, the one right in front of me is my worst investment in my career. But you got to remember those things. So to your question, a recent win was we did a wonderful partnering transaction. Most of our investments have a heavy partnering element to them. This is one where two guys had a company based in Arizona with a division in Switzerland. Great company that distributed and manufactured disposables for precision polishing. Really, as in most of our investments, they didn't need us. They wanted us. They were doing fine. The company was very profitable. It had nice growth. They had a great partnership. So, when we get invited to the table, it's a real honor, and we respect that. So our role there was to help really be a third voice in the dialogue, to help break them out of just this two-party decision or non-decision making, and energize their growth and stimulate their company's evolution. And they were very open to that. And so it was really a great collaboration. We did a lot of the things that we always do. We helped them build out their IT infrastructure and their finance infrastructure. We helped them build out their sales team and sales strategy, help them really clarify their strategy in general, which is a common thing. Those are all common things we do once we come on board as a partner. And we expected the normal trajectory of doing that hard work and then harvesting that hard work. And then when our partners are ready to sell, then we're fine and we go ahead and transact. This one, we were approached by a supplier pre-COVID who was very excited about the prospect of acquiring us. The synergies were very obvious, and so we did listen. It was much sooner than what we had planned or anticipated. We ultimately got to a price and structure that we were excited about. Also very important to us, in particular, my partners who had been, owning and running this company for 20 years, they felt very comfortable that this would be a great home for their team. And so those two things all fit, and we proceed with the transaction. COVID hit, and we said, hey guys, our theme throughout was, let's not do anything that jeopardizes the great relationship we have. So in that theme, we said, hey guys, if things have changed because of COVID, share with us, and we'll shake hands and get back to being supplier and customer, and all is good. And they said, no, this is a long-term strategic decision for us. We want to move forward, and they did, and we closed that in November, and it was a great outcome for everybody. It was great for my partners. It was a good investment for us and our investors, and it was great for the teams on both sides of the transaction. So that was a recent and great win in what's been not an easy time period for a lot of companies.
That's really a great story. Thanks for sharing that with us. I know it'll
Sure.
resonate with a lot of people because, like you said, in some not so great times, you could also, make a breakthrough, right? Make something remarkable happen. That's awesome. So I would love to hear from you what you look for. Is it the company? Is it the person? Is it the culture? What is that one thing that really strikes a chord with you when you're looking to invest?
Because of our philosophy, this real partnering orientation, and for us, partnering means that the people running the company have a significant ownership stake. So for us, it's always about, who are we betting on? Is there a leader or leaders in place that we feel have the ability to evolve and are open to being supported and building out their team and growing their company? And if we can check that box, then it's, what does the company do? Do we like the industry, et cetera? And all those things have to work for us. But for us, the paramount consideration is the leadership, and if we can be good partners to them.
Beautiful. Do you notice any type of commonality in that leader when they're running the company, that you see it pop up, that you go, oh, like if you, for instance, just hypothetically speaking, if there's like a checkbox mentally that you have, and you see that person is a good fit, they're a great team, it's a good product, it's a good person, but is there that one thing that sticks out more than anything else that you find or you see in that person?
I think, great leaders come in all shapes and sizes, right? And you've got some leaders that are very quiet and just execute extremely well. You've got some that exude passion and execute extremely well. I think the theme that you see in great leaders is, whatever their style, they execute. They create a vision, they get their team to sign on to their vision, and then they execute. And I think where you see leadership teams that aren't as successful, they talk about a lot of stuff, but they don't get it done. And it's a real differentiator in our experience.
That's wonderful. That's a huge gem. For those of you listening, what he just shared with us was a huge gem. So if you have to rewind it, I always make this funny thing. There's a new app called Clubhouse, and it's a live podcast essentially. Well, not really a podcast, but it's a platform where it's audio only and it's live. You can't record, you can't rewind it. It's not recorded. But unlike Clubhouse, at least podcasting is really great, because when someone drops an amazing gem like that, like Dan just did, you can rewind it, did a 15-second rewind or a minute rewind. So I really appreciate that as well, Dan.
Sure.
Let's talk about investment size. Are you comfortable sharing with us your typical cup of tea?
Sure. Our we're a little different than what most people view private equity today. I mean, we've been investing before the term private equity really existed, and we've done the same thing throughout. And so I think, I'll differentiate. We don't care as much about size. Size matters only because it's often as much work to do a small investment as it is to do a big investment. But for us, as long as there's a minimum, platform that we know that we can really have an impact and be a good partner for, the size per se doesn't matter. If it's a software company, we'll look at companies that are as small as 5 million in revenue and maybe 0 EBITDA. If it's a normal manufacturing or business service company or other type of company like that, then maybe, $1 million or $1.5 million EBITDA is probably the starting point, although we'll look at smaller, and bigger is certainly not an option. Our preferred investment size is, 5 to 15 million of equity, but we'll do smaller than that if that's what's warranted in the investment. Really, for us, it's more about, we just want to make good investments and partner with good leaders. And if it's smaller, but we can help it become bigger and better, then that's exciting to us.
That's great. I know that'll answer a lot of listeners. They're probably they're wondering what's this typical size. So thanks for answering that as well.
Sure, of course.
So what's that one question that you wish that I should have asked you so far? I know we're limited and with time constraints and everything. What's that one question that I should have asked you that I haven't asked you, Dan?
What should you have asked me? I'd say if I would ask me, if I'm a business owner that doesn't want to exit, but wants capital and other resources to help accelerate my growth, how do I find the right partnering investor? That would be the question maybe you should have asked me.
That's deep. I love it. Please answer that question.
Are you asking me that question?
It's really deep. I love it.
So there's no easy answer. You can, hire intermediaries, but often intermediaries are more interested in selling companies than they are in finding partners. And often intermediaries aren't as interested if it's not a transaction of a certain size where they can get a fee that motivates them. But that may be a route depending on the size of the company and the size of the opportunity. I think talking to CPAs, your CPA is a good route. We get connected to a lot of companies through CPAs. CPAs are trusted advisors that often have relationships with the stakeholders and the folks running the company. And so they'll often know the situation. And if those companies or clients say, hey, we really like to have a partner to maybe buy out Joe, who's no longer working in the business, and to bring some working capital to the balance sheet and to help us do X, Y, and Z. Often CPAs can help open doors or make introductions. Probably the same with lawyers, but I'd say not as effective. And then maybe doing good old Google search, looking for, equity investors, Orange County or LA County. I don't know that that's effective because I've actually never tried that. But, in this day and age, I think it's something you always have to do if you're looking for something, right? And then otherwise use your network. LinkedIn is such a powerful tool. You could, use your LinkedIn network to see if there's anyone that's doing that type of investing, and really look for not just investors, but investors that have track records of partnering, not buyouts, because they're very different. Partnering, you have to have a different skill set and a different temperament and I think approach to investing than you do if you're just buying it out and the stakeholders are going to ride off into the sunset. And the latter is the much more common transaction. Our type of partnering investing is much, it's not as common. It's more specialized and probably a little harder to find.
Awesome. And if people wanted to reach out to you, how could they connect with you guys?
I'm easy to find. My wife tells me I'm way too accessible, but if you look at our website, Solis Capital Partners, SOLIS Capital, our contact information is on there. My email is dan@soliscapital.com. And, we welcome those inquiries. We help a lot of people that reach out to us, even if it's not a potential investment. We just like to be supportive in the marketplace and, you pay it forward.
Awesome. Thank you very much for giving that out. I'll be sure to put in the show notes and I'll include your LinkedIn URL as well. So having said that, as we're coming to a close, if you could sign us off with a one-word close, Dan, please do so.
Potential.
Potential. I love it. This has been a really great conversation, Dan. Thank you so much for coming on to our show and sharing your gems. And that's a lot of gems that you share with us. So I know people are going to be excited to listen to it, and I want to be listening to it as well and sharing it with my audience. And I can't wait to have you back on here again.
Thank you. I appreciate it. And I look forward to it the same.
Thank you. And there you go. I hope you enjoyed it, and great to have you, and thanks for listening. And don't forget to subscribe and stay tuned for the next episode. Till next time, onwards and upwards.